RationalInvestor.com's Daily Brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich.
Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief, free video. Got the stogie, got the beer drinking hat, and now I'm in LA. I love LA. Okay, I won't sing for you. Anyway, happy, what is it today? Today is CPI day, if I'm not mistaken. Tuesday, February 13th. In fact, I think Valentine's Day is around here somewhere, eh? But fortunately, I don't really do much of that kind of stuff anymore. But happy Valentine. I think today's Valentine's. Hope you all enjoyed the Super Bowl and all that kind of fun stuff. Of course, the AFC won. So ironically enough, if we used to in years gone by follow the Super Bowl indicator, and if the AFC won, usually that would be a down year for the markets. But things have kind of changed over the years since then. Anyway, interesting. We still have the bread flashing warning signals here. Not really overly happy right now. Longer term moving average slowly creeping higher, but today is Tuesday. It is Panacook Tuesday around TRI. We have Sjord on the call for the after party. Sjord, are you here today with us?
Yes, I am. Hi, guys.
There he is. So he's feverishly working away on what he wants to talk about in his report today. But by all means, if you have any questions for TRI CTO, today is the day. So markets wise, of course, as I sort of led off, big headline here today, inflation rate drops less than expected. I suppose that's the headline. We can see the actual numbers. Core rate actually ticked up. So that's the one that, of course, we follow for what the heck the Fed's going to do, because they follow this core rate. And of course, they like the personal consumption expenditure number as well. But long and short of it here, today was inflation day, CPI day. Core rate, as we said, came in a little bit hotter than expected. And also the year over year rate also came in hotter than expected. I suppose flat month, or I guess, report to report. Headline number that you see in the newspaper is going to also show an uptick from forecast, but also uptick from previous. And the inflation rate that they'll quote as what the annualized rate is there, you can see came in basically in line with expectation and down a hair. And that's probably the number that we were referring to there in that article. Inflation rate drops less than expected. I might actually argue because of core rate, this actually ticked up here. So what was the market's reaction? And obviously you can see that's basically the only information that we have. We got a little bit of crude oil numbers coming out here from the American Petroleum Institute. That's private body. And of course, we'll have the EIA report tomorrow. But the bottom line here is everybody was waiting for that inflation number. Remember, we had said yesterday there really wasn't a heck of a lot to go off of. So what was the market's reaction? Kaboom! You can see things moved pretty dramatically. It's fascinating how we were watching this potential megaphone setup here playing out on the US dollar index. Had a bit of a double top that came in. Inflation number was printed. Now we have double bottoms, and boom, right back up top, tagging that megaphone top trend line smartly. And if anything, blowing out any top pickers here who actually took shorts off of US dollar. I might even say that well, this trade idea, of course, is gone. This little trade here we had working from this bot level here is still working away. The interesting thing about this US dollar index, and basically the inflation report there said, don't expect the Fed to be lowering interest rates anytime soon. So really what we have to start thinking then, I suppose, is did we do 33% corrections? And if we did, and we break out through the top, then does that mean that we have to work our way up into these bot profit objectives? Believe it or not, it's not crazy. This little actually interesting. We had a one low, two lows, three lows, kind of a sloppy bottom here, but nonetheless, you can see the rally peak there was 25. That trade has had the move stop to scratch level hit. So if we did go and top out here and start to melt back down, that 25 level there, if that's traded back to this little sort of late bot, I don't know what you want to call it, that would be busted out. But actually, I'm quite impressed with the simple fact that this original trade, and what a great analogy of see if you can try and buy, if it's possible, try and buy twice what you really want. And then on this sort of technical setup objective, you let one go, you book some nice profits. Ideally, if you can get it like, 2/3 of the position, that's even better. Sell halves on doubles, that kind of idea with 2/3 of the position, you actually make 20-30% return on your money. And then just let that runner run. You got your stop at scratch. We'll just leave this open. Who knows where the hell this trade will actually be closed out. This is a cash index trading view proxy, so it's not even really real, but it is an excellent demonstration of trading setups and just letting your winners run. So fascinating to see that work. And I get the impression that maybe the world was kind of hoping that the inflation problem was dealt with and the Americans were actually going to maybe start lowering interest rates. We heard people talking about they were actually trying to price in interest rate cuts, like three of them or something through the year. I've said all along, my message all along here has been don't expect interest rates to go down anytime soon. I do believe that they finessed the long end of the curve. Watch that RJ Talks guy. And we have been talking about this recently as well. A lot of like, why did this rally happen? And that RJ Talks guy, he was actually quite angry at the fact that basically Jerome Powell and Granny there, Yellen, they basically lied to the market's face. And why? Because there was a lot of corporate debt to the tune of, hundreds of billions of dollars of corporate debt that was all going to have to be refinanced here at the end of 2023, beginning of 2024. And at these rates down here, there was no way in hell these companies were going to make it. They had to somehow get the interest rates back down. And the scuttlebutt is, I mean, you go listen to that RJ, man, he was pretty pissed off about all this. Scuttlebutt is basically the central banksters. They lied to the market. And sure enough, I mean, you all know this, right? And the good part about this is none of this changes ever. We've been talking about this over the past few days. What's going to happen if you actually see the market start to smile at you? And the scary part about this is if we start doing things like trend channels, like where are we going to draw this channel bottom? I think we got to go all the way back down here, which means that key support. Oh, what a surprise. Look how that Foggenbaum study, the Brian's favorite fib, wow, what a coincidence, and the midpoint of that channel all intersect here right around 111 bucks on this thing. So look out, folks. That whole reprieve that we went through the fall and I guess the early winter, it was all a lie. And you can see how the market now is smiling at us. And the bottom line here is that interest rates went down quite a bit. The economy jacked up, kind of artificially started ramping up. And sure enough, here comes inflation charging back. And if anything, this is exactly why you have to stay on top of this inflation problem. And the sad part about it is Jerry's even said this repeatedly. Well, we don't want to be, letting the inflation genie out of the bottle, and we want to stay on top of this thing. Bull fucking shit. I mean, if they really did want to stay on top of this, then this whole rally here would not have happened here. So anyway, it is what it is. But the point here, of course, we do have plenty of inflation in the pipeline. That ain't going anywhere. Of course, and also too, you've heard Granny and Jerry both say, don't expect prices to go back down because we have hyperinflated the money supply. And we all know, thanks to Uncle Milty, that CPI is a direct function of money supply. So none of this should really surprise us. Anyway, so fact that the long bond here now, it has M'd out, this dead cat bounce that sort of facilitated this whole rally. You might even argue that things like Bitcoin, where was Bitcoin last October? Well, there's September, October. So could we actually find that maybe, we all know that we should be expecting some sort of top to be coming in on the corn price about a month or so ahead of the halving event. Was this sort of encouraged because of the ETF event? If I understand correctly, they're really trying to jack through an Ethereum ETF now. But you can see, I mean, I think we've talked about this at length that really I wouldn't be surprised at the end of the day, this thing looks like some big honking head and shoulders fractal. Doesn't necessarily mean it has to end out bearishly. What we might find is, following the hangover, of course, the good part about it is we already have a pretty good idea. Remember our 2014, 15, 16 bull, when it did its technical correction following the halving event, it did a 50% correction and turned. I get the impression we have talked lots about this. There's tons of liquidity pools down in here. Remember, this is where Fink came out and said, I want my ETF, right there. My hunch is that this is basically your long-term support line in the Bitcoin price. And also, too, this is probably a really good conversation about big, fat, round numbers. I was kind of humming and hawing the other day. Why have we not hit this 50,000 number? It should be hit. It should be hit. Well, gee whiz, you can see where there's the other big fat round number. And it at 25,000. And it happens to be in reload zones against these key support lines. Looks like a long-term trend line is in that area as well. So have we actually topped out here yet on Bitcoin? No, I don't think so. In fact, I would even say just in the short term now that this is probably a shoulder. This is probably a head. This is probably a neckline. And we're probably going to go around. And yeah, anybody who's worked with me a while knows that quite often we find little heads and shoulders is inside really big heads and shoulders is. So if you're gonna ask me what do you think is gonna happen? Of course, I don't really think a heck of a lot about people's opinions, but nonetheless, if you're gonna ask me my opinion, that image I just showed you is my opinion of what I think is gonna happen here. Having said that, probably, we probably want to keep an eye on the broader market, especially things like China. Actually, we've got him on the call here today, so we'll get an update on how that whole China thesis of Sjord's is going. Did he pull the trigger on Baba? Is he going all in on China? Well, you're gonna have to tune into the after party to find out. What do they say? I'm from Missouri, right? So I'm still kind of skeptical about all this. I think that you probably have a nice top end of the range somewhere in there. You notice one high, two highs, three highs, four highs, a whole bunch. If we actually start breaking through this low, then we will start creating bearish market structure. And I guess the scary thing about this is, has that double bottom actually confirmed? I'm not quite sure. I think for the time being, China's sort of trapped in this triangle. And we're just going to have to wait for this to resolve. Interesting to see the internals. Interesting to see that they're not really telling us a hell of a lot. Do have this little bull div here that's trying to play out, but you can see an M's trying to form here. If that M does form in here, then that means that this trade's toast. Or the bullish divergence is toast. I don't know what'll happen with the trade. We'll see what happens. Anyway, so internationally, watching China closely, I've seen lots and lots of articles talking about how China's basically imploding here. So we'll see how this goes. If this thing can hold in here, maybe even fill in all these gaps and stuff, and then start to turn up in earnest, maybe China's turned the corner. But I'm skeptical. Anyway, that's Brian. Looking over at the commodity arena, good old China da. Oh boy, looks like China does doing a double top of da. So be careful, all you Canada bulls. I was wondering how this was going to play out. It is interesting that this is a higher low. So, I mean, you could technically start drawing fog and bombs, but look at what we have happening here. So that's a little disturbing. As just another proxy within sort of the market space, I just happen to have this on the screen. So, if we start doing things like chaos theory to the downside, it looks like China is probably going to come down, test like these trend line support lines. Probably also too, we could throw one on here as well. Boom, boom. So down in this area, and actually interesting, that looks a heck of a lot like that bond chart, with a 2.618. And then the long-term trend line, probably also too, if we did a fib off of this range here. Uh, and then went reload zone. Oh, what a surprise. Actually, this case, it's Mountain Man 61.8. So tell you, because if we finish the day like this, you can see China is getting its ass kicked, and that will actually the M actually confirms even with closes up here, so we could even rally a bit here before the end of the day. But this is looking heavy, and usually I've found in recent years that March is the beware the Ides of March, all that kind of stuff. Usually that's a bit of a tough period. Also, too, I haven't thrown it on here. Maybe we'll do it for tomorrow's video. But we could probably circle back around and see what the January barometer is suggesting, whether that supports this thesis. Looking, finish off this free broadcast, just quick boo. Of course, we were looking at Bitcoin there earlier, gave you a little bit of an idea of what I'm thinking. I mean, can I be a buyer of Bitcoins here? Absolutely not. If anything, if I did want to start barking bullish setups, we had talked about this recently. I suppose it wasn't off of this chart, but you remember we did have on the daily chart. Actually, this was just about almost exactly the time that I left, and I drew this out for you guys on the yeah, it was either on the Daily Brief or the Broiler Chicken Show a few days ago. Remember, we had this nice double bottom, nice breakout, inverted head and shoulders. I also drew this on the total. You can see it basically on both of these markets. I think they were pointing higher, and unfortunately, I think this was a higher time frame inverted head and shoulders target. There's good old Mountain Man. There's that significant long-term trend line that should act as resistance. And there's the big fat round number, 50 G's, right in that area. So our top here came in 50, what is that? 50,333, 50,385, beg your pardon. So 50,385 right there. There we go. Put that right up there. And I might even argue on the daily charts, boom, 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 boom. If you were playing this cute little bull flag, you could have botted that out. There was nothing wrong with that trade. We've come into those objectives. And if anything, what does this look like? This is a daily price chart. So is this going to start forming some sort of railroad tracks? Because today's high was slightly higher than yesterday's. At the very, if you're a bear, right? At the very best, excuse me, got my stogie. At the very best, this will be like the first day of, well, the top of a 3-bar fractal, which means we're probably going to have some sort of inside bar tomorrow. And then the failure of the inside bar would be, maybe a bearish harami or a bear rami or a 3-bar fractal. Don't think you're going to get an empire out of this, but if we probably drill down to like a 30-minute. Hello, look at that. 1 high, 2 highs, 3 highs. Oh boy. And look at that beautiful top. So, all the traders out there, this is pretty straightforward stuff. All right. So good old fog and bombs. My hunch is this probably is a chaos level, and you can see how chaotic price is getting down here against the 200 SMA on this 30-minute chart. So if we go chaos theory, boom, there you go, 2.618. Actually came down into David O's magic midpoint of chaos theory. But interesting, look how 4.669 is right along this key support line here. We are painting lower highs and lower lows. This might be starting to form a bull div down in here. Nah, Willie's not quite stupid yet, so we could work our way a little bit lower. You can see the first W's coming in on the RSI study. So all you lower time frame players, this is a message that if you're bearish, you better cool your jets, and that makes sense. We banged into the 200 SMA, and if you had taken this trade, you'd be feeling pretty good here right now. You're short from the double top there. Your risk, of course, is to new highs. See if we can get that to cooperate. Oh, you wacky, wacky, whack. There we go, something like that. And if you're taking some profits down in this area, that's a 4 to, oh, no, that's too high. Sorry. Got you all excited. Yeah, okay, that makes perfect sense. 2.3 to 1, 2.4 to 1, that kind of idea. That's a trader's life for you. I mean, it's pretty straightforward. So, I think on balance, we've got pretty little M's to work with to frame day trades, but those day trades are probably exhausting themselves. The short trade is now pretty much done here on the lower time frames. And I suppose if you wanted to join the party, being old sharpshooter, you probably want to just simply draw fibs going back up top. And where's Brian's favorite fib? Boom, 78.6 right up against these highs. There's the original breakdown point. In fact, this is probably, that ICT guy. He loves this kind of concept where, you know, show some sort of breakdown of previous support. So this low, this low, this low, this low. All right. So boom, that's finally been broken here. Now we're no longer making higher highs and higher lows. We're now starting to make lower highs and lower lows. We smashed through recent support. And, so I think that would be, I think he calls it a market shift or something like that. And I think you could probably draw something along the lines in there. That's your fair value gap, sort of like the vacuum, if you will. And I notice a lot of these trades, this kind of idea with the fair value gap, they love to just rally up, tag the 61.8, and then roll over. So you got 61.8, the top of that fair value gap, which is our market structure fail level, which is probably the midpoint of that reload zone. And then, of course, good old Brian's favorite fib. And it actually looks like there's even a bit of a price gap right there. So if you want to, like all you sharpshooter traders on the site, you know who you are. You're fucking awesome. And I love watching you guys in action. Well, I think if you're going to be sharpshooting this market, I think that's probably the level you really want to focus in on right there. So what is that? 49,920, and they probably rally up and kiss 50,000 again. I would be surprised if it was just one and done, but that's the level I would be concentrating on. Finishing off with a quick boo at the total. It's basically the same story. Had the inverted head and shoulders. Looks to me, to all intents and purposes, these targets have been hit. We can just quickly visually verify that. Well, maybe not. Let's see what we got here. Oh, no, actually, I take that back. Looks like we could work our way a little higher. Notice we got 1.618 also floating out here. I'd be really surprised if that 1.618 was not traded too. That would be a bit surprised. So interesting how total could actually push a little bit higher here. And then maybe that's the whole sort of conjecture that the ETH and stuff still could catch a bid with talk about them having an ETF. I don't know. Looking at some of the little ones, Eddie, of course, total monster picker. This is another one of his from back last winter. And of course, you can see where the W's are ratcheting up here. This kind of looks like, this was your value trade down here, buying, right against the low end of the range, W's, all that kind of talk, probably bull divs and stuff. I mean, I just happen to have on the line. I'm not quite sure why. I get the impression now this kind of name is in the trend continuation phase, which means you want to think about things like bullish bots. And you can see one higher low, two higher lows, three higher lows. If 25 came in somewhere through here, that would make perfect sense. On balance, though, you kind of see more red on the alt screen than green. And I get the feeling, just generally speaking, that the market is getting tired up here. As we said, Bitcoin's coming off a chunk here after a big run up and hitting a whole bunch of psychological and technical objectives. And I actually think that these crypto markets, they're going to move a lot in the lockstep of the broader market. We know that the January barometer said that the first 6 months of the year is going to be choppy anyway. So what was sort of the reason why the sort of bullish euphoria was happening to begin with? It was the manipulation of the bond market. We noticed also too that BlackRock and all that fucking market manipulation all sort of kicked in on Bitcoin around that September, October. That was the latest pivot up. I believe that a lot of this market was bid up artificially, and now they're in the process of taking this back in the bonds. You can see all the bonds, all the interest rates, everything is heading down here, making new lows on the day. So there are no buy signals anywhere in sight here. And I think this is going to weigh on the market. And you can see the stocks. Yeah, we should probably wind this up here. I just love the sound of my own voice. Sorry, everybody. Stocks haven't really topped yet, if you will. Um, Interesting how our breadth indicator is not really that happy right now. And you notice that the Russell 2000, which is the 2000 biggest stocks, it's not really doing a hell of a lot. You could make an argument that really it hasn't even broken to new all-time highs on a clothesline basis here through the year, right? The last time we were up top here was back in December. So ironically enough, this is actually a wicked divergence where the broader market is not participating in this. But all these, Microsoft and Nvidia and Amazon and all that are taking over our society. They're the ones, nifty 50 kind of conversation. They're the ones driving the market. So, put it all together. I wouldn't be surprised. I mean, we don't have any outright sell signals yet here, either on Bitcoin or the stock market, but over the next couple of weeks, especially watching how this bond market develops. If the bond market really starts to get going in earnest to the downside, it should spill over onto the small cap market. So, anyway, there's your sort of summary report for the day. Interesting to see that crude oil prices, sort of leading energy component, are moving higher here on that inflation report data. What does have me scratching my head a little bit is to see how violently the gold and the silver are coming off here, which is sort of like an indication that the system actually needs more inflation built in to actually justify moving these markets higher. So the system does have the green light to actually start building in. And of course, remember, what time of year are you supposed to buy your unleaded gasoline? Does anybody know? I have a funny feeling it's somewhere around the middle of February. Isn't that how the trade goes? So if this thing bottoms now and we're just getting inflation data prints to start pointing back up now, well, what the hell is this energy market going to look like in the middle of May when it's supposed to top out? All right, so you can kind of see the writings on the walls. Maybe our sort of euphoric rally window here we've enjoyed since October is sort of finally exhausting us. So. All right, there's a nice party report here for you. Cool thing is, of course, Tuesday being Pentecook Day, we should have a really fun time with Stuart in the after party. Of course, he's going to be talking about staking and wallets and all that kind of fun stuff. Just make damn sure to follow all local laws and regulations. Boys here in the U.S. were telling me that Coinbase now, that if you were grandfathered and had your coin staked there before these new laws passed, then it's fine. But if I understand correctly, Americans now are not even allowed to stake coins anymore on Coinbase. So when we do chat with Stuart, just make darn sure that wherever your local jurisdiction is and regulations, you make darn sure to be a good citizen and don't break any laws, right? Right. All right. Have yourselves a great day. PMA for the win. Slow and steady wins race. Remember what your number job is. Don't take no win, no goals. Everybody say here now is. Bye.